We all strive in our investing journey to construct our own unshakable inner citadel. Our filter is uncompromising. We only look for businesses that have been successful in the market for many decades, businesses that are protected by a deep structural moat. We demand reliable, steadily growing earnings and true, positive free cash flow, completely free from any accounting tricks. Furthermore, we require consistent dividend payments that reward us even during the most severe economic downturns. When we find a great business like this at a fair price, with a massive margin of safety, we believe ourselves to be invulnerable. We believe that our spreadsheets and rational models have finally conquered the unknown. We sleep soundly, trusting that our careful preparation has built a fortress that cannot be broken. But the reality of the financial markets is a place of profound, uncontrollable chaos. The Japanese concept of mujo reminds us that all things are impermanent and change is simply inevitable. One day, a moat that seemed eternal collapses. A global supply chain breaks down. A new competitor disrupts the industry overnight. Or we simply make a profound human miscalculation in our valuation. Our unshakable thesis shatters into pieces. Our hard-earned capital fades away. The instinctive urge of Wall Street is to suppress this pain, to quietly sweep failures under the rug, and to rush into the next trade. Most people hide their scars because they fear it exposes weakness. But for the patient value investor, true mastery begins right here, in this uncomfortable moment of failure. Japanese philosophy offers us a powerful tool called Hansei, a deep, honest, and sometimes painful process of self-reflection. Instead of avoiding the pain of a loss, we welcome it as a highly valuable lesson that we have paid for with our own money. Charlie Munger explained this idea perfectly. He said that he knew he would perform much better in life if he was constantly rubbing his own nose in his own past mistakes. It is, in his words, a wonderful trick for success. Monish Pabrai also built a rigorous checklist using this exact same discipline. From every loss, whether his own or that of another great investor, a new question is derived. This permanently blocks the same trap from stealing his capital in the future. Hansei forces us to be honest, to admit when we were foolish, and to document our blindness so that our future self may see more clearly. After this honest analysis follows Kintsugi, the art of golden repair. The cracks in our system are not hidden or thrown away. They are filled with shining gold lacquer and deliberately highlighted for everyone to see. Even the greatest investor of our time, Warren Buffett, went through this exact process. In an open letter to his shareholders, he honestly named his purchase of Dexter shoes the worst deal he had ever made, a mistake that cost him billions of dollars. He turned this crack into gold by making the lesson public. He made the lesson about shrinking competitive advantages visible to himself and to all his partners forever. Every realized loss, when it is analytically processed and learned from, transforms into an intellectual asset. This is a profound act of financial kintsugi. A perfectly flawless portfolio is a dangerous illusion that does not exist in the real world. As Monish Pabrai has noted, having an error rate of 40 to 50% is absolutely normal in the business of investing. We lower our risks not by being perfect, but by practicing the shameless cloning of the brightest minds and by insisting on an immense margin of safety. A portfolio bearing scarred, carefully repaired positions, guided by the humility of an investor who accepts their own psychological flaws, is infinitely more resilient than a portfolio that has never weathered a storm. Build your citadel not out of arrogance, but out of learned resilience. It is undoubtedly imperfect, but it is golden. Master your mind. Master the market.